All right, guys, can you hear me? Just go ahead and confirm that you can hear me, and we can go ahead and get started. I just got a new mic, so hopefully it sounds a lot more clear than usual. And this will be recorded and uploaded later, so everybody gets the chance to watch it. But for now, I'm just gonna let a few more people sign on before we go ahead and get started. What we're about to do today is we're going to explain the watch list for this week and also for the rest of July. I will be creating weekly watch lists after, but at the same time, these stocks are probably going to be hot through July considering their industries and considering what we're going through in terms of electric vehicles and coronavirus. So I try to construct this watch list to not only last us this week, but to actually last us through July. With that being said, I just need one person to confirm that they can hear me, and we can go ahead and get started. Cool. Alrighty, here we go. So we're gonna go ahead and go through this watch list. I'm gonna go ahead and show you guys the watch list real quick before I get started, and I'm gonna run through every stock. We have CHRA, Bcrx, NGS, Aytu, AVCO, SWBI, Nkla, which is a very popular one, BYD, PCAR, and GM. So those are all the stocks that we're going to be charting today, and we're going to be talking about their different technical analysis and maybe some of the reasons that we chose these stocks in the first place. Just a heads up, if you guys hear any cats in the background, don't mind them. I'm babysitting somebody's cat, and I have my own, so they are pretty loud sometimes. But without further ado, let's go ahead and get started. As I like to always start with, I like to be as transparent as possible with how I find my stocks. So I'm going to go ahead and go through my breakdown of my stock screener, which is finviz.com. That's what I use to screen my stocks. Very few settings to change. I just personally put top gainers for the day. Price above the SMA 20. Price is under $20 because most people in our group like to trade under $20 stocks. And then the current volume, I like it over 500,000. If you're not familiar with stock screeners, don't worry. We will have videos coming up explaining all the different screeners you could use and why people use them in the first place. So let's go ahead and get started with the first stock on our watch list, which is CHRA. I chose this stock because it's heavily involved in providing electrical solutions to clients across the world, along with maintenance, which fits right in the focus sector this week around electric vehicles. And I also like its pattern, so I'm liking what I'm seeing. Let's go ahead and break it down on a macro and then a micro level. That way everybody gets a chance to understand why we chose the stock and how we came up with our strategy. So year to date, if you look at the daily candles, so each candle here represents 1 day of movement. On Friday, which was just last week, the stock had a massive gap up and an influx of volume, likely due to the fact that electric vehicles are starting to become more and more demanded by different states. California just announced that they are requiring all trucks and heavy duty trucks to be electric by the year of 2024. With that being said, that gives us a massive opportunity as investors and traders to catch these stocks before they have their massive breakouts as we start to see electric vehicles hit the road more and more. So Nkla is probably one of the more popular ones recently that started their electric truck, followed up by Tesla, and then so on and so forth. So we're going to go ahead and chart CHRA. Not only did we choose it for it being in the right industry, but we chose it because its chart looks good. You want to make sure that you don't trade just the news. You want to trade the reaction of the market to the news. So obviously the market loved what it heard about electric vehicles. You could see an influx of volume happen right at the bottom. If you look at the bottom of this chart, you can see this volume spike on Friday, which is a very good sign, especially that the fact gapped up over the 10 and the 20-day moving averages on Friday. So this is a very promising sign for the near future of the stock. This move can be definitely sustained due to the fact that the volume exists. The stock has spiked up like that before, but there was no volume. But now we're adding volume to the picture, and volume definitely has to be one of the top three one of the top 3 indicators that you could use for you to trade in the first place. So I'm loving what the stock is doing. I'm seeing an awkward double bottom on it as well, which is another bullish sign. So you can see that right here, the stock made a support right around 150. So you can trade the stock perfectly right at this support gap up. The stock gapped up, and now you created a resistance right around the 215 mark. So what do you do from here? You're going to draw your resistance at $2.15, and then you're going to trade the stock accordingly. So the way I've constructed the stock's play is going to be through a breakout play. If you're not familiar with what a breakout play is, let's go ahead and run through it. So the stock is likely going to test the $2.50 mark, 15-cent mark, and then it's going to gap up over it, but probably will get rejected right around $2.30 because that was a place where it got rejected here before. What you want to do is you want to catch the stock as it pulls back to that support, and you want to catch it at that support and place a stop loss right under that support before the stock gaps up again. Now, the stock is not guaranteed to follow this specific pattern. It may very much break under that support. Therefore, it was a false breakout, and you disregard the stock, but you don't take your attention off of it. You keep watching it for it to possibly break out again. You want to keep these stocks on your watch list because they do have a lot of potential, but their first initial breakout may not carry them to the highs that you expect. I have an initial price target for the stock for $2.50. The reason why that's my initial price target is because that was the next significant resistance that the stock had before it got rejected again. So let's take a look at the micro picture to see what that looks like. If we look at the micro picture, we see that the stock on the 1 hour candles had gotten up to $2.50 before, but it got rejected. And so we want to place our price target anywhere between $2.40 and $2.60, which is right in the middle. The sweet spot is $2.50. Now keep in mind, you don't want to hold on to price targets with dear life. Things can change, markets can downturn, and if the market momentum to the bottom is dragging stocks with it, this stock may not make it to that price target. So what you want to always do is you want to raise your stop loss as the stock keeps going up. The moment you are in profit, there is no need to give any profit back. The moment you are in profit, you set your stop loss just below the point where you are no longer going to be profitable on the stock. So if you're making $1 on the stock, your stop loss should not be anywhere lower than that price that gives you that dollar. Therefore, you never give gains back. It's as simple as that. Yes, sometimes you're not going to be profitable right away. You're going to let the stock run a little bit. But the moment you are profitable, there's no need to give that profit back, even if it means exiting the stock too early, as long as you secured your money. Because remember, the name of the game is defense, not offense. So that's CHRA. I like what it's doing. So far, the stock is looking good. My next price target for it is going to be $3, which is going to be right at the support in which it previously broke under. So the $3 mark is right up here, which is technically your price target can be at $3.15, but you don't want to stretch the stock out too much on its lateral move, and you want to make it $3 for the next price target, and expect the stock to make a series of higher highs and higher lows until it reaches that price target. So far, I'm liking what I'm doing on this one. The next one that we're going to be going over is Bcrx, and I'll leave all these in the description, by the way, that way you guys can catch up on them. So Bcrx, let's go ahead and see what it's doing on the macro picture. So if we take a look at the macro picture, the stock had an amazing breakout back in the beginning of May, but it pulled back since. You guys remember how we always talk about you don't want to chase breakouts on the way up. You rather want them to come back to their supports and then bounce off that support to make another move to the upside. In this case, the stock had initially broken out of its resistance of $4. So the stock had a resistance of $4 back in May, in which you could see the stock broke out of, and then finally it pulled back and gave us a perfect bounce off that $4 support, which gives us a perfect entry for the stock. The fact that the stock saw this much volume on that bounce up over the 10 and the 20-day moving averages is a very, very good sign for the future of the stock. So our perfect entry is going to be anywhere between its current price of $4.80 to its next resistance of $5. And then you want to watch the stock for a breakout over $5. Your stop loss should not be anywhere less than $4.40. If you are a little bit more of a risk taker, you can make your stop loss just under $4, which is the strongest support that the stock had. But remember, we always try to go for the safest support. That way we don't tie up our money in a stock that may not give us the best returns. But as you can see, you guys, this is a perfect example of what you should be doing when you're trading stocks. Don't look for stocks like, say this part didn't exist, say this whole part to the left, to the right side did not exist in yellow, and the stock is only moving up. Many traders will try to chase it right up here, and as soon as they enter, the stock starts to fall back because it's already overbought. So what you want it to do is you want it to cool down, bounce off of a significant support, and then you enter the stock at a more safer level. So now we are expecting the stock to gap up over 5 and then eventually test the 550, which is our first price target. The reason why that's our first price target is because the stock had initially made a support and a resistance at that 550 mark. So you could see that the stock had gotten rejected when it tried to move up back above 550, but it got rejected and pushed down. So 550 should be our next price target before our second price target of $6.30. So amazing move on the stock. I do expect a good move from it. As long as it maintains that $4 resistance, the stock should be in good hands, especially with that amount of volume that is likely to sustain it further. So that's a good stock to keep an eye on. Next stock we're going to be watching is NGS. Now NGS is it's not a major headline stock. There's no major headlines coming out about this stock or anything like that, but the chart looks good. I like what it's doing. There's a large gap up over the support. Same exact idea as the previous stock. One good lesson to be learned from this stock is this morning star candle that you're seeing right at the top. This is a signal for a reversal, and as you can see, the stock followed through perfectly. Same thing with this hammer candle. The stock also touched this hammer candle and started to reverse immediately to the bottom side. So keep in mind when you see hammer candles, morning star doji candles, because those can signal reversals. But that's just a whole different story that we'll probably discuss in different videos. But let's focus on what the stock did on Friday. The stock had a massive gap up, closed over both the 10 and the 20-day moving averages, and its volume spiked. Now, this is a great sign for the stock's future. So what we're going to expect here now is we need to look at the micro picture to see what's going to happen next. And so the stock came back down previous stock to test the support. Unfortunately, it dipped below the support to 560, but the moment it broke above that support again, and mind you, when this support got broken under, it automatically became a resistance. So the stock needed to break over that $6 mark for it to be anywhere within our crosshairs for a play. And the stock did indeed break over $6, and as you could see, when it did finally break $6, the stock had a massive gap up and an influx of volume, making it a play for us for a possible breakout play. So what you want to see the stock do here is you want to see it maintain that $6 support, and our next price target for this stock is going to be $7. The reason why it's $7 is because that was a previous support for the stock. So you can see the stock had initially tried to stay above that support multiple times, gap down under it. So you want to fill that up, and then the next thing you want to do is you want to fill the gap that it gapped under, which is the $7.20 price target. So far I like what the stock's doing. It's a perfect pullback play. You want to make sure that your stop loss is no less than $6 and you can play the stock safely. Now next up on our watch list is going to be Aytu, which is making a pretty nice pretty perfect actually pattern overall. As you can see, we are familiar with this pattern. A lot of COVID stocks have been making this pattern, and they are making massive breakouts as soon as they push above that pattern. So what's our main thing to look at when you're looking at display? You want to watch the $1.80 resistance. So the stock has a resistance at $1.80, which is right at the top of where it got rejected recently, which is just last week. You can see it got rejected here recently, not too long ago, in the beginning of June as well. So as soon as the stock breaks over that $1.80 mark, you could see that the stock had tried to break it multiple times, but now it's getting tighter and tighter. The movement is getting more and more tight range. So traders on both sides, the bulls and the bears, are starting to have a disagreement in how high up and high down they want to take the price. and the movement is getting tighter and tighter, forming this nice pennant pattern, which is bound to break out eventually. So you want to watch the stock for a breakout over $1.80, and then you want to set your price target at the very next resistance that it had, which in this case, the next resistance it had was at the top where May 14th hit at $2. So your next price target after $1.80 breakout is going to be $2. But trust me, guys, a breakout on this stock, especially from a pennant pattern like this, can take it much higher than $2, as we saw the case happen with INO, Codex, iBio, CBLI. They're all forming the same similar patterns, and this one is on its way to go next. So that's going to be AYTU. By the way, anybody in the chat, you guys will get full breakdowns in writing for these for the week. That way you guys can keep up and not miss it through the video. AVCO, which was recommended by Rob in our chat. Beautiful pattern on this one as well. It looks like it's ready to make another breakout. You can either play the stock safely and wait for it to break out over $2, or you can wait, or you can enter the stock earlier than that and set a stop loss at its next support. So I'm seeing a support for the stock at $1.65. So you can set your support line there, and then you can also set a resistance at $2. So you can see that the stock had made it to $2 before and got rejected. So your trading range for this stock is between $1.65 and $2. Technically, you can enter the stock anywhere between these two price points, or you can wait for the stock to break out over $2 for a safer play and set a stop loss just below $2. Loving what this stock is doing. You can even give it till $1.60 if you really want to play it more risky, and wait. And your best bet is to catch the stock as close to that support as possible. Set a stop loss below that $1.60 mark, and then let the stock ride up. Eventually, you want the stock to test the $2 price point and break out. Your initial price target is going to be the very next resistance that the stock has, which is going to be right around $2.18. The reason why it's $2.18 is because if we zoom into this target area right over here, you can see the stock got rejected off that point twice before. So you want to make that your very next price target and expect the stock to struggle a little bit before going over that price point. Alrighty, so next up we have SWBI, and SWBI has a little asterisk next to it because one of two things can happen here. The stock is a defense stock. It's a weapon stock. It's Smith & Wesson, if you're not familiar with what this stock is. And so obviously gun sales are surging. There are reports all over the country that people are buying up guns like there's no tomorrow. With the whole with the protests and everything going on, people are starting to pick up those guns. The stock made a beautiful pennant pattern in which it started to push up above on Friday. But is this move really sustained? What we need to look at is we need to look at the macro picture. The stock is definitely in overbought territory. It's over the 70-point mark, but it still has a little bit of room to run. But how far can it really run before pulling back? So I would put this stock on our watch list, and it will be on our watch list. But just keep in mind that one of two things can happen. The stock can either break out over the $20 mark and start to head toward our price targets, which I will lay out for you guys in the description, or the stock may pull back like we saw other stocks do, just so it can cool off the overbought levels. And as we all know at this very point, because we've already explained it twice in previous stocks, the stock may pull back all the way to its initial breakout point of around $14 or maybe even $12 just to fill that gap. So stocks that go up always pull back, and the pullbacks may be very strong sometimes. That way it can cool off. But if momentum stays in this stock, the stock could easily break out of the $20 mark. At that very point, you want to keep an eye on that RSI. These are the daily candles. So the longer the candles that you're looking at, the more significant the indicators become. So considering these are the daily candles and the stock is overbought, you want to watch out and make sure that it doesn't go into way overbought territory, which is over 80 points, before pulling back. So watch this position closely. I will lay out the setup for you guys for the chat. Now the next one up is NKLA, which is probably the one everybody is waiting for. So NKLA, what is it doing and why are we picking this stock even though it's trading under that 10-day moving average? So over the weekend, there was a headline that came out that California is starting to require all trucks and heavy duty trucks to be fully electric by 2024, which is massive news for Nkla, which is already in the news and is already driven by hype. So this stock is a new IPO, so it's really not a new IPO, it's a new acquired stock, and as you know, it has been in the news a lot. So why are we choosing it against our rules, which is under the 10-day moving average? And that's because the hype alone of that headline may carry the stock to new highs, considering it's such a pioneer, or considered a pioneer at this very moment in trading time. So the 1-day candle, not looking too good on the stock. But if we look at the micro picture, maybe we could see a different play that we can make on it. And yes, absolutely, the stock is pulling back as we expected to do last week to its $60 support. As you can see, the stock had bounced off that $60 multiple times and had maintained it. So your main support to watch for the stock is $60. You want the stock to come down to it, and it may not come down to it to touch it fully. It may like bounce off the $61 mark, and it will bounce up from here to test its previous resistance right around the 74 or $76 mark. So the stock has a resistance of 76. So your trading range is going to be between $60 and $76, but you also want to keep in mind that $70 is also a resistance. So truly, you can trade the stock. You can enter the stock anywhere below that $70 resistance and set a stop loss just below 60. The most ideal thing that you could do is wait for the stock to bounce up. You want to watch it for volume on that bounce up and make sure that it can sustain that move. You want to set a stop loss just below that $60 mark and let the stock ride up. Your initial price target should be $70 before the stock fluctuates a little bit around it, and it may break out above it, make it to $76, which is the second price target. And then the third price target is going to be a pretty strong one at $90. So there's a lot of room for growth in this stock. But just keep in mind, when the stock passes $97, we no longer have any historical analysis for this stock because now it's at an all-time high. So what do you do in that case? When a stock is at an all-time high, which was, for an example, let's take May 11th or May 13th, for example. The stock had reached an all-time high on May 13th and pulled back immediately. How do you know to get out of a stock when it's at an all-time high? You have to watch the RSI. You could see that the stock's RSI was over the 80-point mark, which made it overbought. So if you don't know where the stock's next resistance is, which we clearly don't know on a stock that's at an all-time high, you want to watch the RSI and anticipate a pullback as soon as the stock peaks over 80 points, in which it did perfectly for us. So same idea with Nkla. When the stock pushes up over that 76 mark and eventually maybe goes over 97.50, you want to watch it on that RSI to make sure that you don't get caught up in a stock that's overbought, which is likely what happened to many traders as they bought right at the top at 97 thinking the stock's going to go to the moon. The stock was obviously overbought, which you could see on the RSI, and it pulled back to the $60 mark, which is a very significant support for it. So it's like clockwork, happens every time. Stock breaks out, comes back down to its strongest support. So Nkla is looking pretty good for this week. Next up is BYD. So BYD is it's a gaming stock, it's a gaming company. This one can go either way. If Vegas decides to shut down this week or shut down again, the stock's going to fall apart. But if we see things keep on opening up and people's fear of the coronavirus is not as strong, then BYD may actually have a pretty good chance of moving on up from here, especially based on this pattern. So keep in mind the strongest support for this stock is going to be at $18. The reason why it's $18 is because you could see this stock had gotten rejected off of $18 about 4 times before it finally broke out above it. So as soon as the resistance of $18 got broken out above, the stock started using it as a support. The stock had made it to 26, so that's going to be your very next resistance line, or the strongest resistance that you're going to expect. And then the stock pulled back as soon as it broke out, like I said, of 18. The $18 resistance became a support, and the stock may pull all the way back down to it before moving back up. But I love how fluid the stock is being. I love the movement on it. You can enter the stock anywhere near the $18 point and set a stop loss just below it, because you don't want the stock to break that significant support and expect it to bounce back up. Your initial price target is going to be right at $22.90, which is the very next resistance that the stock has. So you can set that as your first price target and let the stock ride. The main thing you don't want for the stock is to break under 18. But remember, as the stock pushes over new resistance points, you want to move up that stop loss to just below that breakout point. So if the stock moves up over 23, you want to set a stop loss just below 23. That way you're not giving back your gains that you made all the way from 18 to 23. Rather than if the stock goes up above 23 and you have a stop loss just below that point, now you have an exit point that still covers profit. So really liking what the stock's doing. It's looking pretty good. Pcard is next. So Pcard, this one is a company that is a heavy duty truck maker, and it's in the electric industry. So far, this stock has a very good chance of bouncing up from here, especially the fact that it's sitting perfectly at its strong support, which is awesome because you want to catch stocks on these strong supports. So the stock has a support right around the 71.70 point. Let's call it 71. Let the stock breathe. And you can enter the stock perfectly at this point and set a stop loss just below that point. The stock's next resistance is going to be right around 76. So if the stock does successfully bounce off of 71 and you see an influx of volume pop up, now you're in good hands and the stock will likely reach 76. You want to consider one, taking profits at 76 or maybe taking some profits and let the stock test 76 for a possible breakout to make it to its very next price target of 78. So really liking what this stock's doing, considering that heavy duty trucks, electrical trucks are going to be a very, very demanded industry soon. Pcard puts itself ahead of the game by being involved in the industry already. Now finally, GM. GM is, personally, I've never really been a big fan of trading GM, but analysts are saying that their trucking industry, their electrical trucking industry alone could be worth $100 billion very soon, now that we're seeing a surge of electrical trucks being required for the road. And GM obviously is an established brand. People trust it. They have plenty of cars on the road. They're an American product. So that sets them up for success because they're already ahead of the game. They're not like Tesla. They're not like Pcard. They're not like Neo. They're not like Nkla. They are already established. That's like Apple making a brand new smartphone device that does something new. Because people already trust their brand, GM has an advantage over other companies. And GM is perfectly right on the support that we want it to be on. So couple things that I'm noticing about GM. I'm seeing a positive divergence. You can see that the stock made a lower low from this point to this point, but it made a higher high on the RSI. So as the stock made lower lows, it made higher highs on the RSI, which is called a positive divergence. If you guys don't know, this is a bullish sign, but not definitive, but it is a bullish sign to keep an eye on the stock on. Another thing to keep in mind about GM is that the stock pulled back to the $24 mark, which is perfect because that was its most recent breakout point, which happened to have been rejected about 3 times before it broke out of it, making it a significant support. So after the stock broke 24 became a significant support, and now we want the stock to bounce off that support. So right now it's at 24.45, which is an absolute perfect entry for us. And you set a stop loss just below that $24 mark, and your first price target is going to be the very next point that the stock had gotten either rejected or found support at. The stock had found support at 26 at one point, but you could see the stock bounced off 26, but finally broke under it. So the first price target is going to be 26, and next price target is going to be the same exact idea where the stock broke below and got resisted before, which is 28, and we'll let the stock make higher highs from that point. Any news of any electric vehicles coming out of GM will have it skyrocket, and that's going to be an amazing announcement for the stock. The strongest resistance that you're going to face on the stock is going to be at the $32 mark. If the stock does indeed break out of 32, then it will likely move to 36, but we'll cross that bridge when we get there. We want to focus on the small incremental price targets first before we move on to the big price targets. So I'm really liking what this stock's doing, but that pretty much sums